Are you watching the Alzheimer's trade right now? The US regulator has approved a weekly at-home autoinjector version of Leqembi, branded Leqembi IQLIK, for maintenance dosing after patients complete 18 months of intravenous infusions. This shift from clinic chairs to the living room can expand access, cut travel time, and accelerate adoption, especially for patients far from infusion centers. Launch is expected by early October at a list price around $19,500 per year, according to company statements and broad financial press reporting. Today, I will walk you through 3 names I am watching closely. Let's start with Biogen, ticker symbol BIIB. Biogen co-markets Leqembi with Eisai, and the at-home autoinjector is designed for weekly maintenance dosing following the initial 18-month infusion phase. Coverage across the financial press notes that easier administration can reduce drop-offs and keep patients on therapy longer, which supports revenue durability. Recent price sits near $132.22 today, with a 52-week range of $110.04 to $206.70 and a 50-day moving average around $131.29 on Yahoo Finance. Street Research aggregated this month pegs the mean 12-month target near the 170 area, implying roughly 28.62% upside from the latest. Quote, if uptake improves post-launch, key watch items are payer processes for the new format, safety monitoring, logistics, and how quickly neurology clinics transition eligible patients to the auto. Now, the way I see this trade setting up, the at-home injector launch in early October can improve adherence and keep more patients on therapy. The best time to look at positioning is around launch, and then again when the first refill cycle updates start coming in October and November. I would personally look for dips toward the 50-day moving average to add exposure, because that level has acted as support, and I would always keep a tight stop a few percent below to manage risk. If adoption is strong, this stock can easily move back toward the 170 average target, which is about 28% from here. And if momentum really builds, a run back to the 206.70 high would be closer to 56% upside. Next up is Eli Lilly, ticker symbol L. Lilly's competitor therapy Kisunla remains a monthly infusion, and regulators recently approved an updated label with a new titration schedule that lowered the incidence of ARIA in a key study. That label work strengthens the profile in real-world use and keeps pressure on market share dynamics as Leqembi IQLIK rolls out. The stock trades around $732.58 today, within a 52-week range of $623.78 to $969.65. The 50-day moving average is roughly $748.42, and the 200-day is about $787.66 on Yahoo Finance. Important reference levels if momentum rotates on Alzheimer's headlines. Recent analyst pages show an average 12-month target in the mid-900s region. From here, that would imply double-digit upside if execution stays on track. Though near-term moves often follow weight loss and diabetes headlines as much as neurology, from my perspective, this setup is attractive if the stock holds the high 700s as support. That is the area where longer-term investors often step in. If momentum builds and the stock clears the 50-day moving average decisively, I see that as a strong signal for traders to add exposure. With Alzheimer's data improving and its blockbuster weight loss and diabetes franchises still driving major revenue growth, I expect the stock to grind toward the 910 to 950 range over the next 12 months. That is a realistic 24 to 30% gain. And if broader healthcare sentiment strengthens, the upper end of that band looks achievable. Finally, rounding out the list is CVS Health, ticker symbol CVS. For at-home biologics, specialty pharmacies become the front line. CVS Specialty lists Leqembi in its book, and through Quorum Infusion Services, already supports limited distribution neurology, biologics. With a weekly autoinjector, the workflow shifts toward pharmacy fulfillment, nurse support, and remote monitoring, areas where scaled operators can add share as volumes grow. The stock trades near $73.15 today, with a 52-week range of $43.56 to $73.23 and a 50-day moving average about $65.98. Fresh analyst roundups put average 12-month targets around the low 80s, implying mid to high single-digit upside from here, with catalysts tied to specialty volume, Medicare mix, and cost controls. The way I look at this trade, CVS is in a breakout zone already. A confirmed move above 73 could carry it into the low 80s, which lines up with analyst targets. For those waiting, pullbacks toward the 50-day moving average around 66 would be the ideal entry zone, because that has consistently acted as a floor this year. As specialty volumes expand with at-home Alzheimer's treatments, I expect CVS to ride that growth and deliver 6 to 14% upside in the near to medium term. If momentum broadens across healthcare distributors, the stock could overshoot into the mid-80s before consolidating. Before you place any trades, remember what could derail the setup. If real-world monitoring or imaging bottlenecks slow transitions to at-home maintenance, if safety headlines reignite ARIA concerns, or if coverage hurdles lengthen time to therapy, adoption curves can flatten and the trade can unwind quickly. Conversely, smooth payer processes, strong neurology buy-in, and better early detection pathways can extend the runway into next year. Here is the bottom line. The at-home autoinjector unlocks new convenience for patients and caregivers, which can support adherence and revenue longevity for the co-marketing partner. Eli Lilly's competitor therapy, with its updated label, may temper safety concerns and keep the race competitive. And CVS stands to capture more of the workflow. As maintenance dosing shifts closer to the patient, together, these three angles give traders and investors multiple ways to position around the Alzheimer's adoption curve over the next few quarters. That's it for today's video. If you like this video, please hit that like button and subscribe to the channel for latest insights and market updates. And tell me in the comments, which of these three stocks do you think has the strongest upside in this Alzheimer's opportunity? I would love to know your view.